Are you wondering how Maryland taxes as retirees? Well, you've come to the right channel. Welcome to the Heritage Wealth Planning YouTube channel, where we talk about building sustainable wealth, how to increase cash flow, pay down debt, get your retirement planning in order. We're going to talk about all these things. And today we're just going back to our 50-state summary of each individual state's tax situation when it comes to retirees. And Maryland is next up on our list. Maryland is a great state where I went to high school in Silver Spring. Loved crabs in Maryland. Used to work at a crab factory. They were good, but it's very high tax. And let's dive into the details and find out. Now, it's very high tax because it has an inheritance tax and an estate tax, the only state left in the union that has both. But how about the rest of it? Income tax, property tax, and sales tax? I don't know. Let's find out. And as is our position, we start with Kiplingers.com. Maryland is such a beautiful state, actually. It's really, it's just fascinating. Maryland's so pretty. Unfortunately, tax code, well, let's find out. Before I pass judgment, I don't know. It's least tax friendly. So let's go back. So there you go. Now we know for a fact that Maryland in the dark blue makes it least tax friendly. Dark green makes it most tax friendly. Dark blue is least. Maryland is knee deep in the dark blue, that's for sure. Maryland doesn't tax Social Security benefits, which is good. If you are 65 or older or disabled, or your spouse is disabled, you can qualify for an exclusion of $29,400. Well, okay. On distributions from 403 and 401k, 457 plans, along with income from public and private pensions. That's good. So if you're 65 years or older, you can get up to $29,400 exclusion from distributions from IRAs, 401. Well, it does say IRAs. It says 401ks, 403bs, and 457, along with public and private pensions, and they also don't tax Social Security benefits, but it doesn't say IRAs. But here's the hitch. Any income outside those exclusions will be heavily taxed in the free state. Okay, so the minute you break that $29,400 exclusion and your Social Security taxes, you're going to pay pretty significant taxes. In addition to the state income tax, which has a top rate of 5 3/4, Maryland's 23 counties and Baltimore City may levy an additional income tax ranging from 1.75 to 3.2. Also has a state sales tax levy of 6%. Income tax, we're not going to talk about that, one less than $1,000 taxable income. High is 5.75 and more than $250,000 taxable income for single filers and $300,000 for joint. Remember, taxable income and adjusted income different, all right? And I say this every time. Adjusted gross income, if you're married filing jointly here and you have you're over 65, your adjusted gross income, you got to add another $26,600 to this number because that'll get you your taxable income before you hit the 5.75. So still pretty expensive there for sure. But if you're $100,000 of gross income, your taxable income there is $74,400. Maryland's 23 counties and Baltimore, we talked about that. Effective tax rate is pretty high, 6.1 for individuals and 6.6 for joint. Social Security benefits are not taxed. If you're a 65 or older, or toward this, we talked about that, but I don't see IRAs in here. You may qualify for Maryland's maximum pension exclusion, which is $29,000 under certain conditions. Distributions from 401k, 457, and 403bs can also qualify for the pension exclusion. Foreign out of government do not qualify. Foreign out of country government pensions do not qualify. If you're a retired member of the military and at least 65 years old, you may be able to subtract up to $10,000 of your military pension. Aha! Look at that. IRA distributions do not qualify for the pension exclusion. Now that is interesting. IRA distributions do not qualify for the pension exclusion. So if you're thinking about rolling an IRA, my friends, I would think twice. I would think twice about that. That's interesting. Wait till you're over 70. Well, let's see here. I know. I mean, you got to keep your 401k because you get that pension exclusion. That's a big deal. I mean, you're talking $29,000. I don't know if that's per person. We'll find out, or if that's per tax filing unit. Why would IRAs not have that? All right. Public pensions, again, we talked about that. Property tax. The homeowner's property tax credit program allows credits against a homeowner's property tax bill if the property taxes exceeds a fixed percentage of the person's gross income. Okay. The median property value in Maryland is $288,000, and the median tax of $31.54. Again, median is really what we want to focus on, as opposed to gross or average, because the median is 50 above and 50 below. That's 1.1%. Let me just repeat that because I was calculating. Median, 50% of the people are above it, 50% of the people are below it. Average is less advisable to look at, because again, if you have Bill Gates, you have old Josh, our average is going to be way up there. But in terms of the median, it's not anywhere near that. So just don't look at averages to the extent that you can. Always look at the median. A tax breaks for seniors. Property tax deferral program allows property owners 65 or older to defer the increase in the property tax bill. Again, deferring the increase never quite sat with me, because it's still there, just kicking the can down the road. Local governments must approve the program. Great. So now I got to get your county to prove that. Deferred taxes become a lien on the property and must be repaid when the property is transferred. So again, you're just kicking the can down the road. And that doesn't do much for me. Renter's tax credit program provides up to $750 a year for those aged 60 or older or 100% disabled. Sales tax to collect on vehicles, of course. And here you go, the big one. I'm going to get into a separate videos and all this, but estate and inheritance tax. Maryland estate tax is imposed on estates exceeding $3 million, which will be increased to $4 million in 2018. Okay, good. In 2019 beyond, Maryland will adopt the federal thresholds. That's fantastic. That is fantastic, because Maryland was pretty low before. Maryland does collect an inheritance tax, but property passing to a spouse, child, or other lineal descendant, spouse of a child or other lineal descendant, parent, grandparent, or sibling is exempt from taxation. That's good. So you can pass it to your brother or sister, which is fantastic. Whereas property passing to other individuals subject to a 10% tax. I'm going to dive into that deeper later on, because I don't want to do that in this video, but we'll get to that. Don't you get me wrong, my friends. Let's look at what the tax foundation says. That's interesting. So you can pass your estate and no inheritance to your brother or sister. And unlike a lot of the other states that have an inheritance tax, if it goes sideways, it is subject to the taxation. In Maryland, it's going down and a little bit to the sideways. Not your nephews and nieces, but to your brothers and sisters. Taxes in Maryland, 5.75 is the tax rate, but then you add your localities, is 10.9. Ooh, hot diggity, which makes it in the top 10, which is not good. We don't want to be in the top 10, not tax and state tax, because localities can really eat you up there. Tax Freedom Day is April 29th, which ranks at 43rd, and we would like to be in the top 20 there. That's why Tax Foundation makes it somewhat confusing. The top 7 for a state burden, and the bottom 43 for Tax Freedom Day. Let's see here. Sales tax, 6% across the board. So that's not bad, everybody. I know everyone seems to think, oh my goodness, 6% is horrible. Now, if you factor in there's no locality sales tax, it's just a state sales tax. That actually puts in the bottom, basically bottom quintile, essentially, not quintile, bottom, whatever the 10%, whatever, not 10%, but basically the bottom part of the state for the union for sales tax. 6% is not too shabby. Gasoline tax is 33.8, which puts them in the top 20. And the tax on cigarettes is $2, which puts them in the top 20 there as well. So we don't want that. So if you just looked at it from a sales, gas, and cigarette tax, you're thinking they're top 20 across the board, but they're not. If you looked at them in the income tax, they're in the top 20 for sure. Let's look at property taxes. Yeah, they're in the top 20 at 1.03%. So not very favorable in Maryland across the board when it comes to property taxes. Sales tax is favorable for sure, or at least more favorable, I should say. Gas tax is pretty high, and with all the commuters in there, not shocking. Income tax is pretty high as well. So of the 3 major taxes, sales tax is low, income tax is high, and property tax is pretty high too. Not, what is it, 1.03, which puts it in the top 20. So not extraordinarily high. Now, a lot of people are going to look at this and say, oh, no, Maryland's taxed too high. But if we go back to the 401k distributions as opposed to IRA distributions, let's see what we got. We're going to go to Smart Asset and see what we're going to look at for income specifics. Maryland exempts some types of retirement income, including Social Security, from state income tax, but fully taxes others, such as IRA or a 401k. I don't know about that. Maryland is just one of two states that has both an estate and inheritance tax. It was New Jersey before, but New Jersey stopped that. So I guess they haven't got through to, I don't know if I thought they stopped it. Maybe it will go effect at the end of this year. I thought it was this year, actually. We'll find out. We'll hit New Jersey next. So let's do $25,000 of Social Security and $25,000 of retirement income. Now, here's the problem. It's not going to be able to delineate between IRA distributions and 401k distributions. So they're going to say we have $884 of taxes. And I don't know that to be true. So we're single. Let's do married. We want to do married. 25,000. All right. Well, why does it keep doing that? Bear with me just a second, my friends. 25,000. And we're married, filing jointly, and it's saying retirement income consists of 25,000. Social Security is 25,000. Saying we have $646 of taxes. I don't believe that to be true, actually. Let's go over here. I'm going to change that and put it as a pension instead. We're going to make it a private pension. We're supposed to have up to $29,000. I don't know why they're doing that. I'm not sure the smart asset calculator is right. And the reason I say that is because what happened to the deductions that we get? 1983. Geez Louise. It's 1953. That's what's going on there. Okay, there we go. That didn't make sense. Okay, so let's go over here to $25,000 of married filing joint. I'm just going to say 1952 just to make sure the calculator knows we're talking 250. We're talking that you're over 65. There we go. Man, I'm having a hard time with this thing here today. All right, so 25,000 across the board. Yeah. All right, so there you go. So no state income tax around. Phew, I was like, what is going on? I wonder if my other video said 1983. I could have sworn it said 1953, but we caught that. So married filing jointly over the age of 65, 25,000 Social Security, 25,000 of retirement income, regardless of from where it's from. But I don't know that to be true because if it's from an IRA, they're going to tax. Whereas it's from a 401k, 403b, they won't. Let's just try $50,000 just to see what the difference is. Remember, okay. Only $254. But see, I think you gotta be careful, my friends, because if it's an IRA, has no exemptions. If it's a 401k, it does. Let's do this instead. We're gonna say $50,000. Why would private pension? That doesn't make any sense. Why would private pensions be subject to more taxes than the 401ks when they both have the same exclusions? I'm not getting that. So let's just go here to public pensions. Let's see. Yeah, that doesn't make sense to me. So I'm gonna have to dive in a little bit deeper on Maryland. That's interesting to me. At the end of the day, though, there we go. As I just want to revisit this income tax range. Social Security benefits are not taxed. If you're a 65 or older, you may qualify for Maryland's maximum pension exclusion, which is $29,000 under certain conditions. Distributions from 401k, 403b, and 457 plans can qualify for the pension exclusion. If you're a retired member of the military or at least 65 years old, you may be able to subtract another $10,000 of your military pension from your federal AGI. IRA do not qualify. So I think the calculator that they're using is wrong. But anyway, at the end of the day, though, that's still pretty good. I mean, if you get, I don't know if it's per taxpayer either. But at the end of the day, let's just say it's not. It's per filing unit, you and your spouse. $29,000 from a 401k distribution and all your Social Security benefits being tax-free. You can have some pretty good income in Maryland without paying any tax on that, my friend. So just be advised, that's not nearly as bad as what the top line numbers look like, for sure. Now, you are going to pay property taxes, aren't low, but they're not extraordinarily high. Sales tax isn't that bad, 6% across the board. So Maryland's not an overly expensive state to live in. For expense on your home, it is for sure if you live in the D.C. area, but Maryland by itself is not extraordinarily expensive, one might think. But I am going to dive into more on this later on, inheritance and estate tax. Very happy to see that Maryland is going to the federal level in 2019. That's a big deal, my friends. That's a big deal. So I'm glad to see that. So welcome to the 2000 or the 21st century Maryland and New Jersey, you as well, because we're going to get you next time. Not next time. We still got a bunch of M's in the States to get, but certainly New Jersey, you're coming up next. So, all right, hope this helps. Don't forget to subscribe down below. Comments are always welcome for sure. Thumbs up always help me. And then hit the notification bell for be notified of future content of here on the Heritage Wealth Planning YouTube channel. Don't forget to visit the blog as well, heritagewealthplanning.com. You'll see the podcast, you'll see the videos, and all the blog posts are on there as well. And you'll see the blog link as well. And we look forward to seeing you next time. Thanks, guys.